Hello, everyone. Hopefully you can hear me okay, and good afternoon. Thank you for joining us at your Overseas Home webinar and the virtual event. I hope the morning's been productive and you've managed to reach the experts throughout the day. My name is Seb Bampton and I'm one of the business development managers here at your Overseas Home. Today on the screen, we'll be chatting with Alex Ingram from Chase Buchanan about your financial considerations you think about when moving across to Italy. It's great to have so many of you with us today, whether you're watching live or on demand. This event is designed to support overseas buyers, provide you with guidance and give you the opportunity to get your questions answered. Once Alex has shared his presentation, there'll be an opportunity to ask your questions to the expert or Alex. But please do ask those questions throughout the session. There should be a section on the right-hand side of your screen. And we'll try and get through as many of them as possible. But if we don't get around to answering all of them today, please don't worry. You can also visit Alex on the booth for Chase Buchanan in the Italy exhibition hall, or you can follow up with Alex after the event or any of his team who'll be happy to help. Alex, hello, welcome. It's great to have you with us. Would you mind just giving us, I suppose, a quick introduction to yourself, Chase Buchanan, and then we're going to go across into your presentation, if that's okay.
Yeah, absolutely. Thanks, Seb. Very happy to be here. My name is Alex Ingram. I'm a private wealth manager with Chase Buchanan. I'm based in Florence, Italy. I've been living in Italy for 5 years, and I've also lived kind of across the continent as well. Chase Buchanan are a European wealth management firm. We have offices across Portugal, Spain, Cyprus, Malta, France, Italy, Belgium. So we're well represented across the continent, and I look after our clients that are looking to move to Italy. So I'm just going to go into a presentation that's about the tax considerations that you need to think of when looking at a move to Italy. So hopefully everyone can see my screen.
Yeah, I can see that, Alex.
Fantastic. So, like I said, I've had over 10 years in the wealth management industry in UK and Europe. I've lived and worked in 6 countries, so I have a lot of experience moving. So I've been in the position that many of you are in when you're kind of trying to research what's out there in a new country and trying to figure out what's going on. Italy is quite a unique country, and it has some very distinct rules. So the first one is really about tax residency, and it's worth pointing out that the tax year in Italy is from the 1st of January to December, so different from the UK. There are some local and regional taxes, but they're relatively small. So we can go over those, but it's not worth diving in depth. The tax residency in Italy is quite unique. So when you do move to Italy, you typically register at your local comune, which is your local council. And you get put in a list called the anagrafe. And if you are actually in the list in the anagrafe for more than 183 days, that's when you're considered tax resident in any given tax year in Italy. It's actually not about physical presence. It's about your presence in any given list. So that's one of the really unique parts about Italy, is that if you kind of go through the immigration process and you register yourself in Italy, you're Italian tax resident, whether you go back to the UK, decide to move somewhere else or not. So that's the first real key consideration when thinking about a move to Italy. There are also some other considerations, like if your permanent home is there or if your family or economic interests are there. But the first one is very much about if you're registered at the local commune. So your fiscal obligations as an Italian tax resident: income tax on worldwide earnings. If you're working, Social Security tax, which is separate. The treatment's a little bit different for Americans if there are any Americans on board. You have capital gains tax. You have wealth taxes, which we'll explain. They're minimal compared to other wealth taxes that you might think of. And then you have to have your declaration of overseas assets on a document called the Quadro RW. And then you also you're liable for potentially inheritance tax or property taxes. And we'll talk a little bit about those as well. So income tax and Social Security, payable on worldwide income if you're Italian tax resident. Social Security is applicable on earned income for those that are still working. And the contribution rates kind of differ whether you're employed or self-employed. If you're looking at a self-employment situation, it can be 26.23% of your income, but there are also some allowances and deductions that come along with that. So that's just a headline figure. It's not a terribly precise one. It's just worth pointing out because when people look at income tax, sometimes they think that's the whole picture. In fact, you also have a Social Security liability if you're still working. And Italy is very attractive for people that are still working, and we'll go into that as well. As far as the income tax rates, these are the income tax bands. There are 4 of them now. Italy is looking at merging these into 3 and kind of lowering the tax liability for everyone across the board. It's also worth pointing out that a very lively ongoing conversation in Italy about tax rates and about lowering income taxes to make the tax burden a little bit easier on people here. So it's very much in the news, and it's definitely, this government is very committed to that. But as we all know, governments in Italy don't always last a long time. And so just as far as capital gains and wealth taxes, the capital gains tax is a flat 26%, and that's applicable to gains on either property or securities. It's applicable to dividends, and different types of dividends have somewhat of a different treatment. And it's also applicable to savings and interest income. So it's very much a catch-all for any kind of financial income or gain. That's actually more of the Italian way of looking at it, is financial income or gain. So there is a wealth tax, and again, this is kind of an English translation that's not necessarily representative of the way that you would think of it in Italian maybe, but a wealth tax on foreign property, which is equal to 0.76% of the original purchase price, typically, of the property. And that can be offset with foreign property taxes in some instances. So for a lot of Americans, actually, that own US property that pay high property taxes, that can be offset. Council tax in some instances can offset part of it, but council tax is equivalent to that value. It used to be very similar to council tax for Brits that own property in the UK, but Brexit kind of scuttled that a little bit and changed the rules. There is also a wealth tax on foreign investment accounts of 0.2% per annum of the account value. That includes personal pensions. And that actually is a tax that is applied to local Italian accounts too. It just isn't made explicit to the Italian population or people that hold investment accounts in Italy. So what these taxes are designed to do is not necessarily to create a wealth tax, but create an equivalency based on if you held an investment account or property in Italy versus if you held one abroad. It's just making sure everyone plays by the same rules. And then there's a wealth tax on bank accounts, which is 34 euros per account. So there's some kind of planning that you can do. If you hold your money in kind of cash and savings accounts, sometimes it's better for wealth tax purposes. So Italy has a lot of very special tax regimes that in some instances aren't as well publicized as other countries around Europe. And this is one that is very unique to Italy and pretty interesting. So there's a 7% flat tax regime in southern Italy for new residents to Italy with foreign pensions. So you need to be in receipt of a foreign pension. It can last up to 10 years. And the 7% flat tax applies to most sources of income, as long as they're foreign sources of income. So capital gains, pensions, state pensions, whether you're in drawdown on your personal pension or your SIP, on dividends. And the eligibility depends on very specific circumstances. So you need to move to a comune, so a council in southern Italy that has less than 20,000 residents. And by southern Italy, we're thinking of primarily anything from Lazio, the state where Rome is, and southwards. And so there are actually quite a few really interesting, I guess, famous communes in southern Italy that have less than 20,000 residents. So don't think that that's too restrictive, because in fact it's not. Some of the most interesting and beautiful places in southern Italy fit that description. And there's no requirement to disclose foreign assets or pay wealth tax during that 10-year period. So it's very much an attractive regime where Italy is looking to get foreign pensioners to move to southern Italy and spend some time down there, spend some money there. So that's the first of the attractive regimes. For people that are still working, there's a regime called the Patriati regime. So what this is designed to do is, if you are still working and you have not been tax resident in Italy in the previous 2 tax years, then if you move your tax residency to Italy, you'll get either a 70% or a 90% deduction of your taxable income. And that just depends on where you settle in Italy, and it's for the first 5 years. So if you settle in the south, it's a 90% deduction. If you settle elsewhere, it's only a 70% deduction. So what that means is, say that you're earning 100,000 euros for a nice round figure. Your taxable earnings are 30,000 if you live in a place like Florence or Milan, or they're 10,000 if you live in a place like Palermo, Sicily. You can extend that for another 5 years and you get a 50% deduction if you have children, like minor children, or you purchase a property. And again, you can't have been tax resident in Italy previously. And then the final one is just the 100,000 euro flat tax regime. So this acts as a substitute for pretty much all other tax liabilities. It's a regime that lasts for 15 years. It does not cover income generated in Italy and can be extended to family members for an additional 25K. It is applicable in more circumstances than are immediately obvious, because it does replace the wealth tax, and it does replace a lot of the other taxes that, when they add up, for either high earners or people with a high net worth, can really be impactful. So it's a little bit surprising how often it is applicable, and it should be looked at for people that might kind of fit that. The other interesting part about the 100,000 flat tax regime, it was actually, my opinion is it was kind of designed with the UK non-dom regime in mind, and it was unveiled kind of as the UK closed its non-dom regime. So it's Italy kind of being a little bit competitive with how they're framing themselves. And a lot of these regimes are really that. Italy's trying to be a little bit competitive. And so inheritance tax is one of the kind of few places where Italy's considered an inheritance tax haven, actually. And it makes sense within the culture because a lot of money passes down through the family, particularly properties in Italy. So your tax liability is based on your relationship to the deceased. It's 4% of anything over $1 million for each beneficiary if it's your spouse or one of your parents that passed. It's 6% if it's one of anything over 100 grand if it's a sibling or a close relative, and 8% on anything for all other relationships. There's also a property transfer tax for any Italian property, but it's 3% of the cadastral value. The cadastral value is very similar to what council tax is based on in the UK. So it's, you know, a value that they kind of came to in 1991 or whatever the date was in Italy for this. So it's a much lower value than the actual real property value. There are some planning opportunities to lower the tax payable as well. Italy does operate a forced heirship system, like much of continental Europe. So only a portion of your asset base can be passed to your designated beneficiaries. Otherwise, it's distributed through your bloodline. You can use the Brussels 4 election in your will to state that you would like your estate distributed under the laws of the country of your birth. Doesn't necessarily mean that you get, you know, UK inheritance tax rules and tax rates. It's more about who can inherit what when you use the Brussels 4 election. That's the important part of it. and just some pitfalls to avoid, particularly when you're coming from the UK. UK tax-free savings products like ISAs and NS&I products are taxable in Italy. Those are particularly efficient in the UK, not necessarily elsewhere. The sale of a UK property could attract Italian CGT. They just need to look through the double taxation agreement between the countries. The tax-free lump sum available on UK pensions, again, that's a UK specific thing, and that can be taxable in Italy as well. So planning ideally needs to be done around that. Italy doesn't recognize trusts. Trusts are kind of a complex matter in Italy, so we can't count on them being a useful planning product. They typically are not. And then very interestingly and specific to Italy, buried in the tax code, UK domiciled mutual funds and ETFs could be considered non-harmonized in Italy, and the gains that you would realize on those, so something that might sit within an ISA, could be taxed at income tax rates in Italy instead of capital gains tax rates. And again, that is very much buried in the tax code, but it is there. So it's just something to think of when planning to Italy. We think it's really important that you speak to a regulated financial advisor before making the move. UK IFAs are no longer able to offer advice in the EU unless they're registered there. It's important to review your savings and investment structures and your UK pensions so that you understand the options that are available, and really kind of best to make everything as clear as possible. If you're going to sell your main residence in the UK, complete the transaction before you become Italian tax resident. And there's some too. And as always, estate planning, having a will in place is very important. So that's it for me. I do see some questions I can go to.
Yeah, thanks, Alex. That was yeah, it was really, really insightful. And yeah, such an important part of the process, which I think you know, a lot of people may not have given too much thought to. So thank you so much for your time in the presentation.
Yeah.
There has been some questions. So as I mentioned before, please do feel free to pop any questions you have towards Alex in the Q&A section at the bottom. We'll try and get around to answering as many of them as possible throughout this session. I think we've got around 13 minutes left. But I can see one here, Alex. It's come through from Brian. He's asked a couple of questions. I don't know if you can see them. The first one is,
I can see them. Yeah,
the 7% flat rate instead of or in addition to normal incorporation tax.
Instead of, so it replaces your normal income tax liability.
Okay, fantastic. And the following question is relating to the regions of different rates of tax. He asks, is Abruzzo in southern Italy for the 7% rate?
Yes, I think Abruzzo is the one region that is probably technically not south of Rome or Lazio, but it's considered southern Italy.
Perfect, that's great. But yeah, as I said, that's the two that we have in the Q&A section. I can see there's a number of people online, and we've got a couple more that have just come through. So we'll go back to Brian's question. Is it better to sell property and draw down the 25% lump sum before moving?
So it depends on your specific circumstances, but you can kind of do this, the two simultaneously. Italy doesn't operate a split tax year treatment. So essentially, if you came in August, you are not Italian tax residents for the rest of the year, right? So you still have time. But yes, certainly for the sake of clarity, it's better to sell property and draw down 25% lump sum before moving.
Okay, great. Yeah, Brian said it may be worthwhile after this session just going across to Alex's booth in the Italy exhibition hall. You can have a more in-depth discussion about your individual plans and even do a video call or a normal call through the platform. We'll move on to the next one, Alex. We've got Marion here. She's asking around tax implications if you're not classed as a tax resident. For example, if she was to buy a holiday home and not a permanent move and not intending to spend over 183 days in Italy.
So I think, Marion, this is actually a really good question. What happens quite often is when you do buy a home in Italy and you don't live in Italy, you are encouraged to become a resident so that you get a cheaper stamp duty tax, essentially, when you're purchasing the home. And so what they want you to do is to enroll yourself in that register, in the anagrafe, because where you're buying your home, because it gives you cheaper stamp duty. You should not do that if you're purchasing a holiday home. That is one of the biggest mistakes that people make. So if you're not making a permanent move, do not enroll yourself, no matter what your accountant or estate agent says. And if you are not spending 183 days in Italy and just buying a home, no, none of these tax implications apply to you. You do have to still pay property taxes, and the property taxes are a little bit more expensive when it's not your primary residence. And you would pay taxes if you rented the property out. But no, purchasing a home does not make you Italian tax resident.
Brilliant. Thanks for the insight there, Alex. And hopefully, yeah, Marion, that answers your question. But yeah, very good question. I think a lot of the other clients listening in may relate to that one. So thanks a lot. One of the questions which comes up quite a lot, Alex, it's an integral part of the process is thinking about the financial side of things. But when would you recommend that someone speaks to yourself or one of your colleagues in the process of their journey of going overseas and purchasing a property?
We definitely think it's in the tax year prior to moving. So if you're going to, the example I gave earlier, if you're going to be moving to Italy anytime kind of from July onwards to the following July, so 23 to 24, then we would say, please get in touch with us now and speak about your planning. We ideally want to have one tax year to prep everything. Further to Brian's questions, to have one tax year to prep everything for you, and get you in the right situation to make the move. Okay,
great. Yeah, I think just to echo that, it's a big thing buying a property overseas, and the more time you have, the better when it comes to pretty much every part of the process. And yes, I think speaking to someone early on is always going to be of benefit. But what is the process then? And obviously we're here today on this session. You guys are exhibiting on the virtual booth. But if a client, if myself was looking to purchase, do I reach out to you directly? Would we then meet face to face? How does it all work?
Yeah, I mean, the first step is really just booking in kind of like a free consultation with us. And so we always are willing to speak with people and hear about their move and what they're trying to achieve. And then what we try and do is guide you down a path where we give you some initial advice on some action points that we think would be worthwhile for you. And we provide bespoke advice to you, to your situation, develop a financial plan that's bespoke to you and what we think are the real concrete steps that you need to take before, during, and after your move to Italy. So it's actually kind of a multi-step process that we take people through. But the first step is really just having a chat, no obligation. It's always free. Just speak about your circumstances.
Yeah, I think just again to reiterate that point, everyone's unique in regards to what they're looking to do and their plans. Some may be looking for a holiday home, or some may be looking to relocate, and it's so important to discuss in detail exactly what those plans are with the expert who can offer the right guidance at the right time, whether it be before, during or after. So yeah, that's really useful. Thanks Alex. Again, please do pop your questions in. I think there's been a couple more. One more from Marion. You mentioned you would pay taxes if renting a property out. Are these different taxes, or do we get into the realms of inheritance tax and all other taxes you mentioned?
No, so they're actually specific taxes for renting a property out. So it depends on how you rent the property out, and that's probably too detailed of an explanation to go into here. But there are specific taxes that you pay when renting a property out. And quite often, actually, a property manager, if you hire one, that can be a part of their service in Italy, is that they will pay the tax for you. So that's I've done it. I have rented a property that I owned out, so I'm speaking from experience. That's a far easier way of going about things.
Okay, great. Well, hopefully that answers your question, Marion. As I said, yeah, do get in touch after with Alex if there's any other questions related to your circumstances. Alex, you kind of touched upon quite an important part, and I know Marion kind of did in her question there around inheritance tax. What do you think is kind of some of the best advice you could give at this moment? Quite generic advice around inheritance tax, because it is very important that people give it the right time and right thought.
I think the most important thing is just absolutely about making a will, and deciding, knowing in advance. I think when you own an Italian property, if you have other assets and you're trying to split assets between heirs or beneficiaries, or you're trying to give specific things to specific people, it's acknowledging that in your will, trying to build the will in Italy so that an Italian property can go to who you'd like it to go to. And I think maybe the most important thing is acknowledging which of your beneficiaries or heirs, if you have multiple, is best placed to deal with it, right? Because no one wants to leave a mess on, when they pass away to their family members or their heirs. And there are certainly, different people in everyone's family. I'm just thinking of my own. There are different people that are well placed to handle a situation like inheriting a foreign property. And so it's probably just putting that planning and thought in ahead of time, and it's maybe as much the thought as the planning, as to who's best placed and who might actually want to deal with that type of situation, and then just acknowledging that in the will.
Okay, great, thanks. Yeah, I mean, with the will itself, Alex, does it need to be translated into Italian, and do you guys kind of help with that? Does it need to be rewritten in Italy?
Yeah, I mean, I think it's important to have an Italian will. It's important to have kind of wills on both sides typically, and to use that Brussels 4 election if you would like to use English kind of inheritance law and planning within your estate. So we don't do will writing in Italy, but certainly have a wide range of connections that we can be in touch with for writing one here.
Okay, great. Yeah, that's been really useful. And yeah, as I said, just to reiterate it, if there's anything else, Alex, which you kind of summarize and to wrap up the session. I know you've gone through the PowerPoint. There's loads in there to kind of explain why clients should actually get in touch with you, and especially early on in the process. But is there anything else why people should seek financial advice when they move to Italy? Is there anything else that perhaps hasn't been covered in that part of the process or PowerPoint that we just went through?
I think the best summary is actually to kind of leave you with the idea that Italy is full of opportunities for tax planning. If you'd like to purchase a home or make a move here, certainly if you'd like to make a move here, Italy is full of possibilities. There are a lot of different planning opportunities and tax regimes available to people. It is not the high tax jurisdiction that it gets labeled with. Many of the people that move here are taking advantage of great opportunities to lower their cost of living and lower their tax burden when they live here. So Italy clearly has a lot to offer, but it is not the high tax jurisdiction that it's made out to be.
Right. Yeah, thank you, Alex. And yeah, Alex, he's been through the process himself. He does live over there, so he is really the expert, not just around obviously the financial side of things, but also the whole process of moving overseas. So yeah, please do get in touch with Alex or any of the Chase team after this. You say the contact details on the screen, or you can go through to the virtual booth where you will be able to speak directly with Alex. But Alex, yeah, thank you so much, for sharing your insightful knowledge, tips, and experience for moving to Italy. Yeah, that's about all we have time for this afternoon. We will have a next session around the healthcare when moving overseas, obviously a very important part of the process as well, starting in about half an hour in this seminar room. So please do come and join in and answer your questions. And yeah, all the best with your property searches. Thanks.
Thank you.
Thanks, Alex. Take care.
Thanks, guys.
Cheers.